gap in mortgage history. So we're trying to figure out, and FHFA and Mark Calabria has not given any guidance, any suggestions on how that's going to be worked out. So your mortgage eligibility could be hindered for your repayment period, 6 months, 12 months. It could stagnate a handful. I think they were saying up to well over 3.5 million individual households are now in forbearance. So that's a big number.
I mean, whether you are a broker or an investor or a wholesaler or wherever you are in this real estate business, wherever you touch it, this type of information that we are sharing right here is so important to be able to share and talk with whoever you might be. For example, you might be a real estate broker, and one of the questions you should ask is, did you take forbearance?
Yep.
And what are your plans going forward? Because if they think that they needed to get a loan going forwards, I mean, and you provide them with this type of information, you might give them a heads up. They might need to. I'm just saying, we're not just talking about how to use this information for yourself. Like if it affects you, if you're like, this is the boring part of the online Zoom meetup today because I didn't take forbearance. Well, you guys, we're talking about helping other people, having this information available to help other people, which will help your business because you're in the business of talking to people, regardless of what part of the business that you're in. That includes wholesaling and brokers and insurance people and everybody. So, we appreciate you sharing these little mini details with us. So this is what we love about Seattle Investors Club, is these little deep dives, right? Does anybody have anything to add to what Keith's talking about?
Let me add one more thing. I think FHA did a really interesting thing to do a partial claim. So for those of you that didn't see what FHA is doing to work through this, basically they're taking that forbearance time and they're going to use that as a second mortgage, right? So when your forbearance is done, you're going to come back out and just start paying your regular mortgage payments, and you're going to have a second mortgage tacked on behind your first mortgage. And it's only due when you sell the house, refinance the house, or in 30 years. So there's no payment, there's no nothing. It's a lump sum that you're going to have to pay when a transaction happens. So I say that right now because this won't manifest itself until you guys take a listing 10 months, 12 months down the road. And then all of a sudden the client forgot about that second mortgage and you guys go to pull payoffs. And then all of a sudden you're dealing with possibly a short sale or a really pissed off listing a client being other funds to close is different by $10,000, $20,000. So that's also something to take into account. Is it going to
record on their title report though, right?
It should, yeah, record on the title report. I've seen listing agents not look at a title report. So I'm just saying.
Say it isn't so.
Valid. So Keith, what about, and Deborah, anybody who's a lender out there, you're welcome to speak up. What about loan modification? That's going to be like an automatic modification, or who's going to be able to apply for a loan modification, right? Because a lot of times we're talking to people and they'll be like, I did this and this, and I was thinking about selling, but I think I'm just going to get a loan modification instead. Is that going to be available? I mean, we're talking about the lump sum being somewhat of a loan modification that gets tacked on to the end. But are they going to be able, are people going to be able to apply for loan modifications of a different type? Or what does that mean, what I'm saying? Do you know what I'm saying?
Yeah. They haven't given good enough guidance to the mortgage servicing world yet on exactly what that's going to look like. They've come out and
I'm asking is it absolutely affects our ability to kind of the timing on when we have opportunities, whether we're brokers or investors, because people will lean on that loan modification ability to draw out as long as they can, right?
Yeah, of course they will.
A loan mod in general is not always just a given. Typically, you will go through steps, and you will start out with a forbearance, and then it might turn into a modification. But that's a whole new contract. You are now starting over.
Yep.
Your previous note and mortgage no longer apply. A loan modification is simply a brand new mortgage, really. So and it's not a simple process. There's a whole bunch of new documentation that they have to go through. So to Keith's point, they haven't given guidance on that yet because they're really hoping they don't have to do that.
So
Right.
so what happened was, with the passing of the CARES Act, it completely superseded the current troubled debt workout requirement that mortgage servicers are required to work through. And if you look through the servicing guideline or Freddie Mac, this is a 770-page document about how to work out troubled debt, right? So the first thing is the borrower is supposed to do an attestation in writing and basically do a mini application again. And what happens in the repayment, so they look at the possibility of repayment for if the new rent schedule is greater than 150% of the original contracted modifications. They're only, so it's gonna get sticky, and then the modification may or may not be granted. We don't
What
know.
was that? You cut out. What was that 150% thing that you said?
If your new proposed out reschedule is greater than 150% of the original mortgage payment, then loan modification is the only way that the SIR can go, because then it straps to repay. It straps the consumer much because that new payment is now over 150% of the previous payment. Does that make sense?
It sounds counterintuitive to me for some reason, but
Well, the capacity to repay. That's just the payment's just way too high. So now they have to look at something else.
So if we started with a $2,000 payment and the 150% threshold is now $3,000, but the 6-month repayment schedule for this is now $4,200, you're strapping the consumer with the mortgage with too much of a repayment obligation. So their only job at that point is, or the only option is then to modify the loan, either severely reduce the interest rate or kick out the amortization schedule, is typically the two ways that they modify mortgages, and dial in that number to be applicable for ability to repay threshold lines.
good stuff. I mean, these are all such good information for when we're talking to people, to be well versed on this stuff. Hey, Beth, are you guys seeing anything on your end? I mean, the market is still super hot here. Have you guys had any hiccups with your borrowers that bought maybe, last year sometime at the height of whatever? I mean, the market hasn't, as far as I'm concerned, here in Washington. I see we got my buddy Jacob Barnhill. What's up, brother? South Carolina in the house. Here in Seattle, the market has not dropped. Listings are down, at least 30%, maybe more. And that is actually creating, I'm just sharing what I see. You guys let me know what you see, is creating a very hot market still that we're in. I have 2 listings coming up, very different properties, different price points. One is higher end and one is, lower end in the 570 range on the lower end. So it's going to be interesting to see how the 2 are received, but we're pushing to get on the market here quickly, like next week, before anything opens up in the state more and more, because I think there's going to be a flood of listings that come on when things open up, which is the old supply demand thing. And therefore you have more supply, and things might be more challenging, or you might not have as many multiple offers as we're having now. Do you agree the market is still strong here? Does everybody agree, or what are you guys seeing out there?
I think you need to define here, because I think there is a difference between Seattle and the rest of the state.
Right. Okay. How about Tacoma? Tacoma's hot, still hot.
Kitsap's still strong. We've been really insulated with all of the Navy presence, the Marines, the civil service folks still working for government jobs deemed essential. So we've definitely have been less impacted than a lot of other parts of the state.
How's Eastern Washington, Beth? You probably have some clients and deals yourself over there.
Yep, we own 3 rentals, multifamily in Wenatchee, and anytime a new multifamily listing comes up, it goes pending within a week at full price. And we have a rental in Spokane and rented that out, the last unit last month, or last week, I'm sorry. So all of our rents have come in, and the vacancy rates in Wenatchee Valley and places like Yakima as well are still less than 1%. So we see things quite strong. I've got one in Seattle and the rest in other parts of Washington, and they're all staying strong. I think, time will tell. Tomorrow's May 1st, right?
Right.
So that's when, in the next 45 days is when you're going to start seeing things change a little bit. We're fortunate that with all of our, I think we have about 40 doors or something in Washington, all of them paid. There was only one that delayed half of their monthly payment because they both got laid off, but they paid it as soon as they got unemployment. And with all of our borrowers, our entire portfolio, 100% of our borrowers paid their mortgage, their interest payments on time.
Yeah,
that may change tomorrow.
Right. And I think that one thing to consider, I mean, I don't want to be the doomsayer, right? But historically, housing has always lagged about 6 months when we have a downturn. Did you just give me a 6-month thing? Yeah, 6 months. Okay. Yeah, housing has always lagged about 6 months. So yeah, there's a lot of people who are wanting to sell, a lot of people who are wanting to buy. Interest rates are fabulous. And so if you've got, everything dialed in and your W-2 and you can get your loan, yeah, I'd buy right now too. But it'll be interesting to see as we start seeing longer days on market, because that's usually the first indicator that we're starting to see a downturn. And I am seeing, maybe, I don't know, I guess I just look at different data, but, we're marketing right now for properties, and I'm seeing a lot of things, come back that were pending, come back on market. I'm seeing days on market extend, but I don't look in Seattle, never did. I stay out of the big cities. So, that's just my focus.
Anybody else have anybody buy or sell anything in the last, anybody sell anything in the last week or so?
My house in Milton is on the market. Yep.
Got
4 days
your
on market. Yep. 4 days on market under contract. So we're
Awesome.
halfway through.
You did a really nice job on that property, Aaron.
Oh, thank you.
Multiple offers, right, Aaron?
No, not on that one. That was one solid offer, but within, 2 days, and then signed around within 4 days on market. So in West Seattle, which of course is always awesome, that had multiple offers, and that one closed a couple weeks ago. But yeah, I was hoping for Milton, and we're looking good.
Jacob Barnhill, unmic yourself, brother. Welcome.
Hey, what's going on?
Hey guys, this is our buddy Jacob Barnhill. He used to live out here in the Pierce County area, now out in Columbia, South Carolina, crushing it with his biz. He's both a broker and an investor. What's going on out there, Jacob, in your part of the country? Just curious.
Yeah, I'm in Columbia, South Carolina. So we're always very stable market with our industries. We have, medical, education, military. So we don't see, somebody made a joke one time where trends go to die here in Columbia. We always see everything last, right? But I've actually just started this last week, and I went over some numbers with the team. We're at about 2.3 months of inventory in our market, and we've seen prices increase. We've seen the only thing we've seen in the last month is a significant drop in listings that are coming to the market. It's just that fear factor. But we've also seen an uptick in the list to sale ratios. So we're telling everybody, just trying to have those conversations. If you want to put thousands of dollars back in your pocket, I mean, this is the opportunity to do it right now and take advantage of the interest rates. That's our conversation.
Yep. So
Does anyone know Seattle's inventory right now? The Seattle metropolitan area inventory of homes for sale? Is it a 2-month supply or less?
I'm not looking at it myself right now.
It's less.
Less than, okay, thanks.
Good stuff. Anybody need help with anything? Thanks, Jacob. Keep plugging in with us, brother. It's so good to see your beautiful beard there. Right on. Smart guy right there, guys. Hey, what does anybody need? Does anybody need anything? Anything you're working on? Any resource, any referral that you need? What do you guys need right now? Anybody?
We've
Anything?
got something to offer. Mariska and I hired a virtual assistant from the Philippines, and she's just amazing. And she's working for us full time now. And we got her through a company. And if you want to kind of ask us about some more about that, they're actually trained in real estate and they know everything.
Yeah, the people who, so the company is based in the US, but they have a full, I mean, a huge staff of virtual assistants, and they're trained in many different disciplines, but they, you know, one of their big focuses for real estate investors. And so they all go through a boot camp, but before they can even be part of this team, they have to have worked in a call center for like a bank or hotel for like 7 years. And so they have good English skills, but then they also, you know, they train them in a whole bunch of different things that, you know, database management and you know, whatever. And then they have an operations person who kind of manages them. And then they will also, before you get started with them, sit down and walk through your processes and basically create a workflow for you of your business, which is huge. So even if you don't use them, it's like totally worth it to even just to do that. But the thing we really liked about it is they, you know, they found out and really discovered what we needed and what was most important to us, presented us with 3 candidates, any of whom would have been fabulous, I think, but we both liked the same person, and we you know, hired her, and she's just been great. And just the fact that they have that support behind them, because we've hired VAs from the Philippines just on our own before, and they're nice people, and you know, they work hard and they might know what they're doing, but just the management part was just a nightmare, and this has been fabulous. So if anybody's interested, just hit us up.
Hey, Mariska, our buddy, our co-friend, Jeff Watson, did you see that? He needs.
Yeah, I private messaged with him last night for a while. Yeah.
All right. Anybody else need anything? Oh, Thomas needs a title company that's well versed with assignment of contract. Anybody want to offer up Thomas their title company? Or do you want title and escrow that's well versed with assignment of contract here locally? Anybody want to offer that up?
Yeah, I would recommend Julie Christensen, attorney at law. She's an attorney. She handles almost all of Heaton Daynard's assignments. She's handled assignments for me.
Can you type it in the chat box for us there?
Absolutely, I'll do that.
Awesome.
And the cool thing is when you use her, the assignment fees do not get disclosed to the seller if you don't want them to, as opposed to normal escrow. I mean, there's ways to do it with normal escrow, but it's a little tricky and you have to walk the escrow agent through it usually, but she does that constantly. So, yep. So I'll type that in. Hey,
just a heads up while I'm thinking about it. If you are a annual paid member of Seattle Investors Club, you can get a copy of our off-market purchase and sale agreement, an assignment contract that we had reviewed by, I'll say, the one and only Jeff Watson. Just a reminder that you know, that might be something that might be beneficial to you if you need something like that. If you want to talk about it, give me, you know, hook me up, or just simply go email Joe at Seattle Investors Club if you're already a paid annual member, and we'll get that over to you if you need it, right? Also, for all you out there wholesaling is on the rise. All the gurus are cranking up their wholesaling machines and all that other stuff. So I 1,000,000% encourage you, if you have not listened to our podcast episode number 63 about legal wholesaling with Jeff Watson. Jeff told me that it was probably one of the best deep dive legal wholesaling podcasts that he's done, and he's done a lot. So, I mean, I spent years studying this stuff and working hard to get a relationship with Jeff Watson. So that is probably the most valuable asset we have on Seattle Investors Club, is that podcast with Jeff Watson, for those of you that are out there wholesaling.
And I'll just say this too, on wholesaling right now in this environment, there are a lot of distressed homeowners. So you have to be very careful.
Right. Be very careful with your message, of course. And the other thing I want to say is, Nee says he's heard a lot of wholesalers recommend Tara Busey at Attorney's Title as well. I've also heard that, absolutely. And he's got that information in the chat for you guys. We've got a bunch of people.
Did I hear that attorney's title just sold recently? I thought I'd heard that just recently. Anybody know anything about that?
I don't know about that. What else do I want to say to you guys? You know, one of the things that we have like a window, I feel like right now there's a window of opportunity. I don't know why. I was also, one of my thoughts of is these properties, like Nee had just said in the chat that one of their clients listed a house in Northwest Seattle, got it under contract at 110,000 over asking after 3 days on the market, 50 showings, 10 offers, all contingencies waived, 30,000 non-refundable earnest money deposit, so and so. Right now, it feels like there's a pocket of opportunity for what I call prehab. I got to dig out that prehab video that I did, Joe, that if you are an investor right now or a wholesaler that actually closes on deals, or, you know, I guess you're not a wholesaler then, that's called an investor, and you're actually closing on stuff, or you're flipping and you are just closed, there is an opportunity there for here right now. If it's going to take you 4 to 6 months to get that done, and we don't know what's going to happen with our market, I would like to work with you on the idea of maybe putting a sign out in your yard where you bring potential retail buyer to that partially completed flip with your own sign out in the yard. And then I've been working with Keith on a loan program that we could slap in with that buyer where you could actually end up getting that closed with a retail buyer just by sticking a sign out in your yard and us slamming this certain loan in place with that buyer. If you guys, anybody's interested, I have already, somebody's already talking to me about this. We're going to look at the property this weekend. It's just a tag team teamwork thing. Won't hurt you to see if you can get some money in your pocket, you know, along the way. And maybe if you're a general contractor, you still get paid to finish the job or something like that. But if anybody wants to talk about that with me, again, hit me up, Julie@SeattleInvestorsClub.com, or text me 206-910-2985. And I'll tell you all these options that I am, you know, cooking up in my head. That's my favorite thing to do, is figure out how many options I can offer to whoever in whatever situation. But just throwing that out there. PPP forgiveness. Joe, did you grab that off our Slack again? I slacked you that forgiveness article that I threw up on Seattle Investors Club last week. It's in our Slack. Maybe you can post it again. What I liked about this, it was a really, really, really great article. If you or anybody you know, again, what we're talking about here isn't just all about you guys, even though I love you guys. It's about helping other people and the conversations you can have with other people to help them. The best way to get leads right now is to be of service to other people. Regardless, that your message should be a service message. Even if you're a wholesaler looking for, you know, off-market deals, you know, the better message is a service message, and then you can have a conversation about all those things you can offer them. But this was an article about how to start the forgiveness process with your PPP loan. Really, really good, simple outlined article. And maybe Joe, you can grab it and post it back in the chat there. And then in addition, I want to remind you guys that I posted this webinar in case you took PPP, you have small business clients, you're a small business or whatever. And it was a webinar from one of my friends who's a dentist, and it was hosted by the Dental Association. But they actually went through this calculation on how to calculate the amount of your forgiveness. It was really, really, really good listen. So I encourage you guys all to go back, and I don't know if Joe, you can find it and grab it off the Seattle Investors Club Facebook page. But if you guys are not on our Facebook page, first of all, 2 things. Please go join our Meetup page for Seattle Investors Club, and then please join us on our Facebook page. But moving on, anybody else? We got through the friendly title companies. What else you guys need? Anybody need anything?
I can chat a little bit about, I was mentioning in the chat. So we did a survey of over 500 investors last week. just on the current state of the market to see.
Make sure you say who you are, since it doesn't say.
Sorry, I'm Nee. I'm Nee with Certain Lending. We're just always interested in getting investor opinions because that drives a lot of our products and what we do. So, in this survey, like I said, we surveyed over 500 investors, and I think everyone, we were only expecting like 200, 300 results, but people were willing to put their opinions out there. And so, in regards to the economic outlook, so most investors now believe that we're already in a recession or depression, right? At the beginning of April, that wasn't true, but I think at this point, everyone's agreed that we're probably in a recession already. But they don't believe that the economic impact of COVID-19 will be worse than 2008, right? And that it will recover much faster. They also don't believe that it will be more severe in the markets where they invest. A lot of it is here in Seattle, right? So a lot of investors are actually pretty confident about picking the right markets. That's what we got from the survey. And then, so more than 80% of real estate investors believe that demand was strong before COVID-19 hit in their markets, right? And half of them believe right now their markets are weak, but that demand will start recovering in 6 months. And when we asked about 6 months out, 12 months out, 18 months out, the chart, they got stronger and stronger. So they don't think that, the housing, in terms of the housing market, we talked about the economy before, but in terms of the housing market, investors, like 3/4 of the investors don't believe that COVID-19 will cause house prices to decline, which is interesting. And that the overall magnitude will be much, much better than 2008. A lot of people believe that foreclosures will increase, right? And that investors and real estate investors, especially in single family, will lose money because of COVID-19. But that over the next 6 months, there'll be a lot of opportunities from that. And then they believe that the supply of real estate will expand across retail and distressed channels over the next 6 months. And in regards to financing, investors are uncertain about mortgage availability and getting a loan. Everyone believes that COVID-19 will make loans harder to get. But however, they expect overall debt cost and conventional financing will get cheaper. And I think a lot of people will tell me that conventional financing rates are going to stay pretty low, maybe even all-time lows by the time 2021 hits, right? And some people believe it's going to be that way for at least 2 years. However, investors believe that business purpose mortgages, so like asset-based loans, hard money, will get more expensive. So that's the overall summary.
Keith, you agree with the 2 years? Cheap money?
Yeah, I think there's going to be cheap money for 2 years. Yeah.
You know what I'm thinking when I'm listening to all this is I always find there is a lag time between what the average homeowner or average retail buyer, their sentiment, what they're thinking about doesn't always match up to where we're at with reality, right? And so I'm curious to know, Nee, when we're talking about like, okay, these investors think the market is going to be stronger in 6 months, that's from the perspective of what? From the perspective of getting their deals sold, because there's going to be buyers out there with cheap money, retail buyers that are able to buy those. But the perspective of, like, if I'm an investor looking for wholesale deals, right now, it could be that people are freaking out, right? And you might get good deals while the market really is still strong, right? Nervous people and still a strong market. There's that window of opportunity right now, maybe to, we're not gross here, so I'm not saying take advantage of people, but just some people just might want to sell. I'm not suggesting that we go steal properties from them, or, you guys know what I'm saying. We don't like that kind of stuff here. I'm talking about there's people with a need and their perception is they're nervous, and then the market is actually still pretty strong. And so there's right now, my whole prehab, like, get it, close on it, and list it. clean it up, throw it on. If you want to work on it, work on it. But you might get surprised right now on what you're able to get sold, especially, can you see me pointing at this guy? With the loan programs like that we're talking about on some of these renovation loan programs that are out there, right? And so when I think about what Nee said on the perspective of the investors think that in 6 months the market's going to be hot, why? What are they talking about? They're talking about selling their deals, because it might be that, I always like to think about buyer or seller sentiment. Where's their head and how does that match up to where they're at with their thoughts and fears and confidence or whatever to where we're at as investors? Because those always seem to be like, they don't match up. There's that lag. You guys following what I'm saying?
Well, obviously, it's the buy low, sell high cycle. So, I mean, we are preparing ourselves to go on a shopping trip. And do we want to take advantage of people? Heck no. Do we want to help them out if they have a difficult situation? Absolutely, yes. That's what we did after 2008. But, and there are people who sometimes aren't in a desperate situation, but they just want to be liquid. They just don't want to have a mortgage. We encounter those as well. So, I know some people who are very well off who are saying, you know what, I'm just going to rent for a while so I can take advantage of great opportunities in the future. So, but yeah, I think it depends on if you're on the buy side or the sell side, because obviously, right now we still have really strong comparables. If you were selling a property right now, you can get a good appraisal because you've got good comps. Will it be that way in 6 to 12 months? Who knows?
Hey, Min, I see you're out there, our friend Min. Can you unmic yourself and say hi? Can you hear me, Min? Are you able to unmic yourself?
He's grabbing a cup of coffee.
He's off doing too many deals is what he's doing.
That's probably it.
Asking. Can you hear me, Min? No? Okay. Well, Min is off doing some serious lead generation. And what I want to do, I got Tyree on here too, right? Min, if you can unmic yourself, brother, we want to hear from you. So please join the conversation if you're able to. If you're not, try and type something in the chat box for me. And I'll check in here with Tyree. First of all, if you are a wholesaler on the line today, please speak up. I know I got Tyree and Min here. Anybody else that is full-time wholesaling or has wholesaling a big part of their business?
Hey, Julie, I just got here.
Oh, awesome. There you are, brother. Hey guys, meet our friend Min. If you haven't met Min, he's a wonderful guy. We love him to death. And I just want to check in with you on how's it going on all, you're doing some pretty good marketing for wholesale deals. In fact, I know you're buying for your own account and so forth. I don't know, maybe I'll put it that way. Let's just say you're marketing to sellers. What is the current, is your activity picked up on responding from sellers that want to sell or get cash offers, or has it been the same, or what's going on in your world, brother?
I would say it's been the same. I've been getting into, marketing, doing SEO stuff. And I've been paying attention to search frequency, search results, and what people are getting for that. And just seems like when all this started, a lot of guys or a lot of homeowners have slowed down their searches. So there's been a big decrease in motivated seller searches. But recently things seems to have picked up a little bit more. But then since people are home, I guess we're getting just less consistent, less predictable results. But then other avenues, I was doing some texting before all this happened, but right now, I just don't feel good about doing that, and so I haven't done that. I know a lot of investors are actually doing more of that just because their response rates are higher, right? With cold calling and texting. But
you're not doing it, Min, because you feel like it's not the right message right now for people, right?
I have a really hard time just doing something I don't personally believe in. So I feel like right now people are staying home, and only the people that I reach out to through other methods, like if they really need to sell at this time, then they'll reach out. But then I feel like these really disruptive marketing techniques are, I just don't feel good about it. Plus, I feel like people have a defensive mindset a lot of times also if they're not necessarily in need, and then they'll think that or I feel like they might think I'm out there to take advantage of.
What about your great Facebook ads that you're running? Are you getting some traction on those? I mean, they hit me up all the time, so I appreciate that. Good job.
Yeah, that's funny. I ran an ad for 2 days, like right when this COVID thing happened, and I just got chewed out by a lot of folks. I didn't even come. I actually said that I'll give some extra money to whoever the seller chooses, or a small business, local small business that they want me to support. Just a way to give back and then just possibly get some referrals. But I mean, that message didn't go well at all, and I feel like that's a less invasive type of message when it comes to this stuff. Maybe because it was so new back then, but I mean, since then, I'm doing more retargeting instead of
Right.
just through Facebook instead of just cold ads.
Great time for that, guys. Really good, affordable time to do that kind of thing. How's the retargeting going?
Oh, I've gotten some leads from retargeting, and they're not. I don't know where they come from. I need to track that better. I don't know if it's from somebody searching on Google, or they're from somebody from direct mail. I still sending out direct mail consistently right now. But I don't know if it's from people searching for my company, or going on my website, and then they're getting retargeted. So I don't know where they come from.
How are your direct mail response rates? Are they same as they've been, or increase?
It's a little better. It's a little better than where it was earlier this year. I don't know if it might be timing. It might be less people are sending them, so I'm not sure.
But that's the message of, hey, we want to buy your house still, right? Same message.
Yes. Yeah, I'm still sending to distress lists, niche lists.
Yeah.
Nothing.
Yep. So there's no big swing in things you're seeing other than search results being down a bit.
Right.
For keywords and stuff like that, right? But no big noticeable change in your business one way or another. Maybe your direct mail's up on response rate a little bit, right? Are you able to get
the conversation is a little easier, I feel like, just because everybody knows about this now. I remember when this first started and I was talking to sellers, I didn't know how they were perceiving this whole situation. So, but now I feel like everybody knows that this is happening, and if we need a better price or a lower price on something, then they're more. I feel like they're more understanding, at least.
Do you think you're getting better deals right now, or you think you can get better deals right now? Or again, that goes back to that's my whole point on the disconnect. Do you think with somebody that wants to sell right now that you would be able to get a better deal right now than you did a month ago, or about the same? If they made the connection of, okay, I probably have got lost some value, I need to sell for a little bit less, or not yet, that's where I'm going.
The ones that really need to sell, they do understand that this is happening, and I feel like their initial asking price are more reasonable, actually, for some pretty good properties. The people that I'm following up with, that I've been talking to before all this started, actually they asked me what they should do. I actually told them to wait, but I think I need to call them again.
Awesome stuff. Go ahead, Nee, unmic yourself.
I just wanted to say that, I'm seeing, because my inbox still has wholesale deals coming through because I used to flip. And I'm seeing that all these deals that they're much more viable now. So the numbers actually make sense, right? Meaning that there's actually decent margin in them. And always, numbers have to be verified, but from the same wholesalers, I didn't see things that made sense before March. So it sounds like sellers are more willing to negotiate and are more reasonable these days, perhaps. But yeah, I'm seeing deals coming through. But I'm always skeptical, right? Because an ARV is, who knows what it actually is in 6 months. And so I always recommend to be careful. And then another comment I mentioned is that, so I think someone asked about the Spokane market earlier. I talked to Jennifer Beadle. She makes offers over there pretty regularly. And she says that, you know, ever since COVID-19, so days on market have increased. Prices are the same, but sellers are more willing to negotiate right now.
Yeah, maybe it's coming. It'll be interesting to see. Yeah. How do you place an ARV on something that is, you know, 4 to 6 months out right now? That's why I'm saying it might be, if you're, you know, Justin, I don't know if you want to add in on that, but it might be, you know, an idea, since you don't know what's going to happen. Like I said, stick a sign out in the yard if you've got a flip going on, and see what calls you get. You might end up getting some great deal. You might not make your 50 grand, but what if you made 30 and you could, you know, move on and throw that into your, you know, your dry powder keg. So I want to talk to you guys about that. If you want to talk to me about that, please. So good tip on watching the Spokane market. We should invite some more Spokane people on as well. I just posted something today on EXP about Seattle Investors Club, which is because I'm a broker at EXP Realty, and we have a national reach brokers all across the country, and basically invited them to plug in with us here at Seattle Investors Club. So I think it'd be fun and interesting to get more people from across the country to jump on this with us to hear what's going on in other markets, right? Because what markets like lead in downturn? Vegas, right? Or something like that. Does anybody know what markets lead in downturn that we should be watching and paying attention to? California, maybe?
California, Arizona, Nevada, and
Florida, even.
And Florida, yeah.
Tourist markets. And
Yeah,
oil
actually,
markets too, right?
I'm gonna make a real big effort to get some investors and people on from those markets on with us here in the next week or two, and just see what they're saying. That would be a great idea to hear. You guys want to hear from them or what? Anybody?
Sure.
Yeah, you guys like to hear from them? Nee, if you want to give me, you know, maybe you know somebody, Nee, from other markets, or I'll reach out to Jennifer, but I can also tap into our EXP network and get some people from out that way as well. And if you guys want to hear from people in certain markets, I'm going to go for the markets that I think are indicators that'll go first, that'll give us a heads up. But if you want to hear from somebody in a specific market, just let me know and I'll track that down for us.
So
Okay.
I think, you know, there's so many different factors that are going to affect different markets. I mean, we've all known, you know, for many years, Texas has been a really strong market. But what Larry and I were just on a mastermind a couple of weeks ago with our Note Pro folks. And there's a few folks there who they don't necessarily buy discounted notes, but they create a lot of notes. They do a lot of seller financing. And it used to be in Texas that, you know, everybody, you know, a lot of people work in the oil industry. And so no one had savings. You didn't really need to because you had this great job. But now, hey, a lot of the oil people are out of work. So it's going to be really interesting to see what happens in the Texas market. We haven't really seen anything yet, but who knows?
Hey, Julie and team. So I work for a PMI company. I mentioned that earlier, and we measure risk in the real estate industry throughout the entire country. And we price for risk higher in high risk areas, of course. We just put out a list of markets where we feel it's not going to perform as well. And so we've raised our pricing in cities throughout the entire United States. We raised our pricing in the entire state of Idaho, which was one of the hottest markets prior, California, and especially Vegas or Nevada, the whole state of Nevada. So we have bean counters at a high level looking at real estate risk, because the PMI companies are the one that pay claims if a bank loses money on a foreclosure. So we are really involved in looking at the real estate market around the country and seeing areas that will perform. Interestingly enough, Washington State was not mentioned as a high risk market at all. So no increased pricing here. But we do have cities all over the country that we're targeting as high risk. It could change tomorrow. I just read today that Idaho is opening up May 1st. So if everybody goes back to work, you know, it could change.
Right. That's going to be an interesting watch. Is there a way for you to share some of that with us on the Facebook page or whatever?
Yeah, I can just go to the Facebook page and put a list of cities. I don't want to put my company name to it because it's not something they ask us to make public.
Okay.
So.
Yeah. Or type it in the chat here, you know, but this is recorded and we do distribute it out, just so you know. So, but you know, otherwise, let's just everybody say, hey, everybody on the call gets this benefit. Would you guys agree then, like some of the big opportunities might be in some of these markets that are going to be hardest hit, right? Where you're going to get stuff really, really low price. You know, is that the way you guys are thinking, or are you thinking, no, I don't want to be in those markets? How are you guys thinking about that as investors?
Really, as a buy and hold, if you can buy and hold, then you'll probably be okay. The question is how long.
There you go. Slap in letter seller financing on top of that, man. Let's see.
To flip, you just need to buy right and predict something close to what the market decline might be when you calculate your ARV on the buy end.
I mean, it's interesting because we have the stats from 2008, 9, you know, on how those markets dropped. And that could be the benchmark, right? I wouldn't expect they're going to drop. Well, I don't know, you know, who knows, right? More than that, same as that. What do you guys think about that?
Remember, Seattle was one of the last ones to drop.
Right.
Do you guys remember that?
Yeah.
Well, yeah, I mean, our unemployment in the Seattle proper, I think, never got above 5%. I mean, you know, that's all about that.
It's like a different animal this time, even though we're not having a housing crisis, right? But still, you know, if somebody was able to find the stats related to how much each market dropped in value on the last crisis as a benchmark, that would be something valuable. I'm sure there's.
I mean, so it really varied by market, right? I mean, I know folks in Ohio who lost 50-60% of their value. Of course, who wants to live in Ohio? But still, you know, that's a big drop. But I think that, you know, getting back to more fundamentals, you know, after, you know, what was it after? I don't know what, you know, because we've never fixed and flipped, so I don't know what people use as their MAO anymore. But you know, when I first learned about it, you know, in the you know, like 2009, 10, whatever, it was, you know, 70% less expense, you know, 70% ARV less expenses, and I know that people were buying things at auction for, you know, 90 cents on the dollar. So I don't know what calculations people have been using most recently. But what I heard again in our mastermind was, you know, let's go back to the 70% and let's add another 10% onto that, just to be safe.
Yeah.
So go lower.
Hey, Julie, I would say track rate of change.
Yeah.
And add that into your equation. If you track your numbers and you're looking at your ARV changing on a month-by-month basis, and you're tracking your days on market and your project time and all that stuff for your project, you just need to track that rate of change. If it's going to take you 6 months and you're able to track only 3 months of that rate of change, that's your best guess. And if you want to give yourself more of a wag of a deeper dive on price, just to be safe, but I would track rate of change in ARV or prices.
Good tip. Good stuff, brother.
Mm-hmm.
Hey, Justin, or anybody, I need a plumber. Somebody's texting me for a plumber. Anybody got a plumber in Seattle that they like? Anybody
got one?
Seattle area?
Yeah.
Julie, Jason Ness.
Oh, yeah, okay.
Jason and Ken.
Yeah. Anybody else got one?
Yeah, I've got one.
You didn't tell me?
Yeah, I got to remember his name though. It's Crash is his nickname. I'll
well,
send you his contact.
you can shoot me his stuff offline here. I appreciate it, guys. Well, we're running long today, guys. 2:47 or 12:47. Anybody else have anything to add? Good talk. It's always good to see you guys. Thank you for joining us. I mean, it's just absolutely awesome that we can get together like this. Anybody have anything they want to add? Do we miss anything in the chat? Anybody wanted to say?
Yeah, me. I posted the Fed website. So the Federal Reserve, the St. Louis region is responsible for tracking and measuring statistical data. So that's why it directs to the St. Louis Fed. But that website, you can look up anything. You can look up appreciation, household formations, all sorts of different stuff in different market areas. Type in Seattle appreciation and it'll pull you a 30-year history. So you guys can look per.
And are you posting that somewhere, Keith?
Yeah, it's in the chat.
Can you post it in the SIC Facebook page and say if you're on today's mastermind?
Yeah, here's a good resource.
Yeah. Love you, bro.
Done.
Thank you.
I can do
Awesome
that.
stuff. Nee, go ahead and ask Deborah your question out loud.
Yeah, I was just hearing her earlier say that Idaho is one of the states where they raise the rates for risk. I'm just curious because everything I hear about Idaho from Washington investors seems to be that they're starting to flock over there because, Seattle, Spokane, it's all going, it's no longer a good place to invest. So I'm curious why Idaho is deemed riskier at this point.
I think she might have popped. Oh, there she is.
I'm back. All of the markets are deemed riskier if we've targeted them with higher pricing. I don't have the reasons yet, but I'm going to be getting the reasons next week as far as why we did what we did for each city. I can understand Vegas for sure. I mean, Nevada, I get that one, but the other ones I don't really quite get.
That'll be great info for us.
I'll let you guys know.
And remember, next week is going to be into the first week of May. So we are going to have some really good feedback on how everybody's May rental collections went, or at least start to, because they probably aren't late until the 5th, but be good intel next week. And we do have a podcast. We have Enrique Jevons lined up to be on the podcast mid-May to give us some feedback on how it went for all the units they manage, across Western Washington here. But other than that, anybody else?
Do you think they're going to have a May Day right this year? or they're at the social distancing?
Well, May Day right this year. All right, guys.
I'll have to stay 6 feet apart.
I appreciate you guys.
Thanks.
Very
Have a great
much.
day.
Good day, everybody. Come back and give us your feedback. Jacob, good to see you, bro. Right on.
Thank
See you
you.
guys. All right. Bye-bye.
Bye.